to TradeTheMBI.com. This is John's reports for the 19th. Well, funny thing happened on the way to the office. Suddenly, people stopped wanting iPhones, and when that came out, that they were cutting back production on their brand new model because everyone needs the brand new model because of the camera. And not that the camera before that one and the one before and the one before wasn't good. This one's just better. And so now you're getting a series. So we saw FedEx do the same thing with their report, Amazon expressing some weakness as well. So a lot of people are saying that things have changed dynamically from the consumer side, and that kind of surprised the people in the market. They must have been sleepwalking or whatever, haven't been paying attention, but been noticing that since, well, actually, we talked about it in April because that was when we could see that the recession began. And of course, they won't talk about that until sometime next year. They will talk about when the recession began. So, whatever. We'll let them do their thing. We've still got Magenta leading on this turnaround. You can see we've got green there, the potential for a crossover. Bit of softness at this particular stage, nothing dramatic. Again, 23% line comes critical force right there. So anything below that 37 definitely proposes weakness going forward. So keep an eye out on that one. We got a similar readings here from the NASDAQ. A little bit softer because it's still below the 23%. So that battle up and down over the 23% we talked about before. If the NASDAQ was able to crush it and stay above it, that would have propelled the S&P, and it did not do that. And you can see why, because that Apple weakness really threw everything into a tizzy. And it's just a suggestion that there's going to be more difficulties going forward economically, and that situation has definitely caused a need for central banks to get involved. I mean, the euro is being propped up. There isn't any question about that, because what do you need a euro for? And there's real no balance relative to its production versus what the U.S. is doing. Now, if the U.S. is theoretically, coming to a super stop, or at least a crashing halt from a growth standpoint, that would bolster the euro some, because the euro is in negative growth as it is anyway, but it would mitigate it. That's a foolish argument, but whatever. We just play with what is, and the potential for that euro, though, to continue to decline in any rapid winter situation, I think that still uh, bears thinking about. From this standpoint, everything's in a soft area here. Gold, not able to catch anything, because again, you get into the potential of, if the economy starts falling off, a deflationary cycle, because companies will need to liquidate very quickly. Oil has been softening. The question is, that's clearly got to be a demand side, which is exactly what the Saudis said was happening, that they recognized a demand failure, which is why they were cutting. U.S. accused them of doing it just as a collusion with Russia to keep prices high. But if that demand fall off was true, and this is why we follow those things, then in fact, things will get worse, and they will get worse fast. And of course, Fed is always going to go too far. So treasuries, we talked about this at 150, that this TLT here, which is the inverse, um, continue to move lower. And I had projected, between 95, 93, um, all the way down. And that will be too far when the Fed does it. And at that point, they will know that they've overreached, because it takes 6 to 9 months for their first rate increases to start impacting the economy. And you figure they've done, and this was the mistake that Bernanke made in '08, and everybody knows it, and they still keep doing it. So you just have to scratch your head as to why. What's the rush? Inflation's already there. They were so slow on that move that they couldn't see it coming, and got behind. So, tiny tightening back, before it began, or right as it was first being noticed, would have made all the difference, even if it was transitory. They could have softened at that point, but they let it go, and now they have no control over it. And the only way out of it is to squeeze the economy. From a Bitcoin standpoint, unable to really move anywhere, and there's really not going to be any impetus until there's some kind of driver from a currency standpoint. Some kind of existential credit crisis would be the only thing that I think that is going to cause it to have any real oomph. And from the 50K standpoint, a lot of up and down within this. We've had just way too many MBI whites leading, though, in a soft spot from that. So, not able to hold any of the significant moves and continues to fade. Intraday was quite detailed. We had a lot of action. I had marked earlier, once my charts came back up, the positive extreme retraces that needed to get potentially filled back in. Now, there were, of course, the series more. So you can say that the lows of each of these different bars going through, and you can mark them as well. I try not to do that to make the chart too cluttered. We had some overhead ones that existed prior to, relatively important to keep those as well because they become resistance points and you need to see a breakthrough for those. And when they're strong, then you're in pretty good shape. So we created another set that began early on, and this was all pre-market action. And then once we got towards the open, we started to get the selling, and then that continued for a while. And came down, filled out the first one, but then we ended up just shy of it. I pointed this out that we were just shy of that final uh, positive extreme fill, and that's usually pretty bullish when that happens. And sure enough, a little bit of ABC action going through, but generically was pretty strong from that buy configuration, and then it started to fade. We ended up with some, I think, fairly weak shakeout for the move that we were getting. Just really wasn't able to produce a whole lot of anything. And then as the sell signals started to come in, you ended up with a couple little areas where there was some strong strength, and then boom, uh, started to get the fade. And then once it broke down, we came right back down to the same. And then at the end of the day, they gave it a nice rally, only to be what? Sold off to fill the positive extremes that began, let's see, was one bar over. Come on, there we go. Right here. And we just filled those in the pre market as we speak. Accident, of course. Who could have known? Yes, other than our indicator knew. So that's all we needed. Anyway, this is just I think one of those, collective building points where you begin to realize the state of things. And it may not be in your community. Things could be going well. It could be in a big city that's doing just fine, but you can see the erosion is taking place and it's starting to have a macro effect and even beginning to affect some very large companies, and they're seeing it in a big way. So, worth a note, trade accordingly. As always, look for me on the Skype chat. Talk later.